Hey guys, I'm Dawn with Short Sale Experts, and if you're behind on your mortgage or worried that you might fall behind, there's one thing that your lender is going to ask about before they actually approve almost any solution at all, and that is your hardship. Basically, a hardship essentially is the reason you can no longer afford your mortgage payment, but not every reason qualifies in the eyes of the lender, of course. So I want to break this down to talk about what a hardship actually means and when you need one. A hardship is typically defined as an unforeseen, urgent, and uncontrollable event that causes financial distress that may prevent you from paying your mortgage. Now, the key words here are unforeseen and uncontrollable. Now, for example, commonly accepted hardships such as job loss, reduced income, serious illness, unexpected medical bills, divorce or separation, the death of a spouse, or a natural disaster that damages the home. Now, these are situations where life changed in a way you could not plan for in any way, shape, or form. Lenders may also consider situations like a business failure, major required home repairs, or even large car repairs if the vehicle is necessary for work. But here's the important part. The hardship must usually be documented. And what that means is if you lost your job, they may ask for a termination letter. If it is medical, they may request hospital bills or doctor bills. And if it's a divorce, they will ask for legal documentation of separation or divorce. Your lender may want proof that the financial hardship is actually real. Now, let's talk about when a hardship is actually required. If you are pursuing a short sale, you almost always must have a documented hardship. A short sale means that the lender is agreeing to take less than what is owed on the mortgage. So they require evidence, of course, that you cannot reasonably continue to make the mortgage payments. Makes sense, right? For a loan modification, a hardship is also typically required. Now, a modification changes the terms of your current loan to make the payments more affordable, and lenders need to see why the current payment is no longer sustainable and make sure the new payment you can keep up with. Forbearance usually requires a hardship as well. Now, forbearance is when the lender temporarily pauses or reduces your payment because of a temporary financial situation. For instance, think medical recovery or temporary job loss, things that are just temporary. So across most foreclosure prevention options, hardship documentation is a key part of the entire process. And this is where many homeowners get stuck. They assume that getting behind on payments is enough, but that's not enough for the lenders. The lenders are really looking for a story behind what has happened for the homeowner to get behind. If you're dealing with a pre-foreclosure or worried about falling behind, the earlier you understand your options, the more solutions you will have available. I'm Dawn with Short Sale Experts, and if you want to understand your options before foreclosure becomes inevitable, make sure to follow this channel because I'll continue breaking down the real step homeowners can take to protect themselves, stay in control, and protect their financial future.